Hello again, it's Bob Reeder, Canadian Mortgage Professionals. This video, we wanted to talk a little bit about the process of qualifying for a mortgage. And there's several approaches we can take to do that. Initially, we'd either have a client submit an application through the online website. It's secure. We can talk on the telephone, and the most preferable is to meet face to face and go through the process in detail, give everybody an idea about what's involved, and just to feel much more comfortable and informed moving forward, and verifying what price range and area and those kinds of things that you'd be looking at, rather than getting disappointed looking at something that perhaps you can't afford. So anyway, the first step is for us to obtain the information that we need to obtain a response from the banks or lenders to verify that they've accepted all of the terms and criterion for qualifying. There's only 3 basic criterion for qualifying, and there's little variations on each one. But the first thing would be credit. Credit's extremely important, and particularly if people are putting less than 20% down, the credit score has to be above what they call a beacon score, a 600 threshold. And these scores are determined from 300 to 900, and 600 is the threshold where the insurers will not insure a high ratio or less than 20% down mortgage if the credit is below a 600 score. So the next thing would be down payment. The down payment has become more of an issue in the last several years due to money laundering and fraud and all other kinds of things, but essentially the down payment can come from several sources. Most of the time it would be accumulated savings, whether it's RSPs or just actual savings in your bank account, or a gift from parents or immediate family and that type of thing. We do need a 90-day history of that. The last thing would be income. And of course, income can be derived in a bunch of different ways. I mean, people could be a salaried employee, hourly, they can be a commissioned salesperson, self-employed, incorporated, there's a number of different ways, but we have to establish the income source and amount, and then we use a percentage of that to qualify a client on how much mortgage they can afford, taking into consideration their debt and some of the other factors that would determine where they qualify. So once we get that information together, we would approach the lenders, whoever's the most aggressive at any given time, and guarantee an interest rate for 120 days, so a 4-month period. We would review all of the terms and conditions, flexibility, we describe the process, and of course provide copies and every other thing, disclosures on how we get paid, all the costs that might be associated with paying the lawyer, and if there's appraisals or whatever other things might come up, we have to touch on all of that. Of course, being a mortgage brokerage in the province of Alberta, we're licensed and regulated through the Real Estate Council of Alberta, and we have to follow strict guidelines on the Privacy Act and disclosure of all the process and every other thing. And so we would provide full copies of all of that documentation on the first meeting. And then of course, hopefully you'll be prepared and fully comfortable to proceed and go shopping then. You'll be ready and have everything set and know exactly where you stand and what you can do. We look forward to hearing from you, and we'll see you on the next video. Thanks.